In the short term, the stock market is a popularity contest. In the long term, the stock market is a weighing machine. That's what Warren Buffett has said about value investing. And today I wanted to talk about PayPal and show that if you weigh the value of this company measured by free cash flows, revenue growth, profitability, this company really looks good. But unfortunately for them, over the last couple of years, they haven't been a popular stock. It seems like bad news comes and finds them. Even though their fundamentals look good, they keep getting caught up in a bad story or a bad headwind. But are those just stories or is it real? I need to examine that and see if this is a stock that I should be investing further in. I'm a current stockholder of PayPal, feel good about my investment, but I'd like to take a closer look, update my analysis, and make a decision whether I should buy more shares, hold, or sell my shares in PayPal. Before I jump into reviewing their fundamentals, let me remind you I'm an individual value investor, just sharing my experience, my journey, and I wanted to share my analysis on PayPal. I'm not recommending you buy PayPal, I'm not recommending you sell it, and I'm not providing any financial advice. I hope you find my video interesting. Now, looking at PayPal, they're about a $66 billion company. And if you look at the last 5 years, the company had a stock price upwards of $300 per share. Today, the company trades at $63 per share. That's a big drop. You would think to yourself, well, the revenues must have gone down, or maybe their profitability just became terrible, or their cash flows disappeared. None of the above is true. They're actually a bigger company than they were when they were trading at $300 per share. They're more profitable and they generate more free cash. So that is interesting that over the last couple of years, this stock has just really been left out of the inner circle of popular stocks. The market cap is 66 billion, but their revenue is 30 billion. So you're paying about 2 times revenue. Their forward P is only 12. This is a growing company that has a lot of technologies that they use as a competitive advantage. They have products like Venmo, which is really popular in the US. I can't think of anybody that I know that doesn't have Venmo. It's become a verb. Hey, I'm going to Venmo you some money. It's pretty neat. And the other area that I like about PayPal is that they continue to grow in areas that the market needs a solution in. For example, international payments. PayPal can really grow in that area. They have a couple of solutions, and I think they can get better and grow their revenues in that area. The buy now, pay later model, they're getting into that, and I think they can also grow. I appreciate and like that they're kind of taking the slow road on buy now, pay later. And the reason I like it is that's a really risky idea. What if you have a lot of people buy a bunch of product and they never pay you? Well, that could be a huge loss. So going into it, eyes wide open, carefully is a good idea for PayPal. Analysts like PayPal. They're saying that most analysts have a buy rating on the stock, and they say that the stock is undervalued by 12%. In other words, it's discounted by 12%. Again, over the last 5 years, the stock has really gone down, but over the past year, the stock is up about 4%. Financially, the company has grown very nicely. If you look at their top line growth, they have grown for the last 10 years. That's solid growth. And if you look at their cash flow looks really good for 2023 at $4.2 billion. So I'm going to use their free cash flow from 2023 in my free cash flow valuation model. The earnings per share also looks good. We look at earnings per share. The company in 2023 is expected or did $3.84, but in 2024, they're expected to have a earnings per share of $5.17. I'll use that for my valuation as well, since I value companies based on free cash flows and also earnings per share. Analysts like the stock. There's 29 analysts that review PayPal. It's a lot of analysts, and they say that it's discounted by 12%. So that's a good sign. PayPal reported their earnings for the first quarter of 2024 on April 30th. Overall, I like what they had to report. Their revenue increased by 9%, and their transaction volumes actually went up. The free cash flow the company is going to produce is growing faster than I expected. I'm using 2023 numbers just to be conservative. And so far, after one quarter, they should exceed that by a pretty good margin. Overall, the company had very good profitability, and I felt like it was a solid first quarter earnings. If they have a similar report in Q2, I'm going to be very comfortable with this investment. They provided guidance, and they have good growth expected in Q2, upwards of 7% on revenue. For the year, they should also do well. As we look at the economy isn't booming, but it's also, we're not in recession. So I think transaction volumes, it's great to see them grow on PayPal. I think transaction volumes will continue to grow. I like looking at Visa from an informational standpoint. They did their earnings and they're also growing their volumes. PayPal and Visa are similar, but different in some ways. And I think that PayPal and Visa, from a business perspective, their revenues grow along the same lines. So overall, Q1 earnings were very positive. I'm going to value PayPal by looking at the free cash flows I expect they're going to produce in the future, discounting those free cash flows to today's value to establish what I think the company is worth. I'm also going to look at earnings per share and do the same thing, determine what I think the stock is worth based on the earnings per share. Looking at free cash flows first, I'm going to be conservative and use 2023 as the starting point of my forecast for free cash flows. And last year, they did $4.2 billion of free cash. I'm going to grow those cash flows by 8% in the first 4 years, and then long term, grow them by 4%. I'm going to discount PayPal by 8.5% because they have a high quality balance sheet with very little debt, high cash balance, and they produce a lot of free cash flow. When I do a net present value calculation on all the cash flows I expect in the future, I get a value of $96.7 billion. That's the value of all those cash flows. I'm going to add the cash, which is $14.3 billion, and take away debt, which is $9.6 billion. It gets me a equity value of $101 billion. The market cap of the company is $66 billion. So overall, there's about a 52% discount on PayPal if you value the company based on free cash flows. Looking at earnings per share, it's expected they're going to do $5.17 per share in 2024. I'm going to give them a PE of 18. They deserve 18 or higher because they're growing. It's a good company, profitable, free cash flow generating. And I'm going to grow those earnings per share by 7%, which is a good conservative growth rate based on the forecast that I'm seeing out there. The per share value using earnings per share is $99.57, but their current stock price is only $63.60. So there's a 57% discount using earnings per share. When I blend the two, I get a 53% discount. Back to my opening analogy. The stock market is a voting machine on which stock is popular. And it seems that especially when stocks kind of hit a negative patch in their existence, the news agencies really pile on and they try to find every negative story they can about a company. It certainly seems that way at times around PayPal. But over the long haul, the stock market is a weighing machine, weighing the value of these companies. At the end of the day, if PayPal can produce these cash flows and these earnings per share, this stock I expect is going to rise in value. Am I going to buy more shares in PayPal, just hold, or sell my shares in PayPal? Well, I'm going to make my decision by looking at three factors. First, it's all about the company. Second, it's all about the balance sheet. And third, it's all about the discount. The company. I really like PayPal. I like their business. I like that they're a new generation of Visa or payment system companies. They're old enough to really have great scale, but new enough to continue to innovate, coming out with products in the buy now, pay later, or apps like Venmo. I think the company has a lot of innovation in their future. Their management team, I know, has been questioned quite a bit. I think it's almost like a situation where PayPal is guilty until proven innocent. And I think their management team's fine. I think the company's doing well. If I look at the fundamentals and I look at their financials, I just see a well-run business. So I'm not quite sure I buy into a lot of the negative stories around their management. So overall, I believe in PayPal and I like the company. The balance sheet, they have more cash than they do debt. So their balance sheet is in great health. The discount, they provide a great discount. So I'm going to be buying more shares of PayPal, continuing to build a position up to maybe $60,000 in value. My position is a little less than 40,000 at the current time, and I'd like to build that up because I believe PayPal is undervalued and over the long haul it's going to be worth more. I hope you found my video interesting and I really appreciate you watching.